Welcome to the fourth episode of the HoneyPot podcast for Sweet Conversations. I'm your host, Carmen Hendricks, and I took the lid off the pot today for a very special guest. Today we are talking about Bitcoins, cryptocurrency, and why you should invest. We have the wonderful opportunity to speak with Chima Burey, a veteran leader and educator with a 15-year professional background across diverse matters of the finance industry. He's kind enough to share a little bit of his time today and speak with us about Bitcoin. Listen in as we talk about Bitcoin candidly. Chima, before we get started, can you just give a brief introduction of yourself, things that I've not mentioned yet?
Hello, everyone. My name is Chima Burey, as Carmen mentioned. I'm a 15-year industry professional in regards to financial markets, and my focus has been currency and commodity trading.
So today we looked at Bitcoin just before we started recording, and just for the sake of everyone listening, today is December the 7th, 2017. And we've seen that it has hit almost $19,000. It had a high of how much was it? 19.6?
Yeah, today we actually hit on some exchanges 19.6, but officially definitely getting closer and closer to 20,000.
That is amazing, considering that in January it was $1,000.
Yep, January of this year it was $1,000 per Bitcoin. So we're almost, it's incredible how we've seen this meteoric rise of Bitcoin throughout the year, or in the exposure that it's getting. And everyone's becoming more and more aware of Bitcoin, not necessarily understanding what it is or what it does, but the name is becoming more and more a household name in 2017.
Right. And you and I were talking before, and we were talking about whether or not Bitcoin was a worthwhile investment. So let's talk about it. Is this a worthwhile investment?
I think it's an incredible investment. In this industry, one of the terms that we like to use is we follow the smart money. So when we notice that Wall Street is getting involved, when we notice that Silicon Valley is getting involved, as the everyday investor, or as someone looking to find a way to seek other opportunities outside of just putting your money in your savings account, the idea is for you to see what the other individuals are doing. So as we pay attention to CNBC, or we're watching or reading the Wall Street Journal, or we're looking at different articles online, it's always interesting to know that the investment idea isn't just your own, that actually individuals that do this for a living find value in it as well. And we're seeing that with the popularity of Bitcoin inside of these industries, as far as both the tech industry and the financial money industry as well.
Mm-hmm. Yes, we were talking about how Tesla is accepting Bitcoin and Ferrari is accepting Bitcoin for payment, and how it's really just taking off. I'm glad that you mentioned the stock market, because I did find some information that they're supposed to be introducing it to the Chicago Exchange for the futures market. Can you touch on that?
Well, as far as the details of that, I think that's still going to get ironed out, but it is something that everyone's paying attention to and finding out exactly how we can bring it to the masses per se. If it's something that people are interested in trading, and various exchanges can get involved so they can make money on exchange fees, I wouldn't be surprised that it would be listed sometime next year. But it is extremely popular. More and more people want to be involved in it. And definitely, if there are random exchanges throughout the world, actually, that you can actually buy and sell Bitcoin. So as far as them coming into, let's say, the various regulated exchanges here, the founders of Bitcoin didn't necessarily want the powers that be, or any type of country taking stock in Bitcoin or controlling Bitcoin itself. So some of that might be counter to what the original founders wanted, but it is a free and open capital market, right? So different opportunities are going to be available to various exchanges or financial institutions. Therefore, as I mentioned before, Wall Street is finding out ways to get involved in how they can monetize on the excitement of Bitcoin as well. So we'll see how that unfolds. And of course, as that, let's say, unveils or unravels, I'm sure in 2018, we'll probably see some exchange offering that as an option. Right now, you can buy Bitcoin, or you have some ETFs that are following blockchain activity and things like that for those ETF investors. So there is a way for people to participate in Bitcoin in various whether it's through stocks or opportunities like that. However, my recommendation is that you actually get involved in the actual coin itself, that it should be a part of your investment portfolio, not just playing it in an ETF, but actually find a way to where you can purchase Bitcoin, have Bitcoin, do investments in Bitcoin rather than just fiat currencies.
Okay. So for those people who are new to Bitcoin, who don't know, let's give a little bit of Bitcoin 101. Can you explain what Bitcoin is and give them a background of what it is and how it got started?
Okay, so Bitcoin started in 2009, and it started with the idea of independence and anonymity. So for a lot of people or a lot of individuals in the tech world and a lot of free thinkers, I just felt like they didn't want the government involved in their day-to-day transactions. Now, along with the average everyday person that doesn't want to be told what to do with their money and who they can send it to and what they can spend it on, or at least being monitored by quote unquote big brother. You have those individuals who just want their own independence to be able to spend as they like or to share their wealth with whomever they choose. Now, in the beginning, you have some shady characters that took advantage of some of the benefits of Bitcoin. Because of the anonymous nature of it, you had some underground illegal activity that was taking place, and that's how people would exchange that currency, Bitcoin, for certain services that would be deemed illegal, especially in the United States. So then Bitcoin had a stigma attached to it, that this is a currency used by illegal players. And then that really stifled initially the growth of Bitcoin because people weren't really looking at the benefits of it or how it can really advance society in the way that the blockchain, as I'll explain a little bit later, can be used, because it was nicknamed, this currency is for illegal players. Now, beyond that, how Bitcoin works, or more importantly, how blockchain works, is I would like to give the analogy of a Visa card transaction. So we've all been out to dinner. Let's say we go to a restaurant and you take your Visa card and you swipe it after you finish your meal. Essentially, that card, which is controlled by Visa, is confirming with the bank that you have enough US dollar currency to take care of the bill at the restaurant. Mm-hmm. So the confirming mechanism is Visa, but Visa is confirming the cash that you have. So Visa is confirming back and forth that you actually have the cash to pay your bill. So as we advance that analogy, the blockchain is the confirming mechanism, and the currency that sits on top of the blockchain is Bitcoin. But the excitement, even though it's exciting, there's a new currency that's being used, and like you mentioned, Tesla, Dell, Microsoft, a lot of businesses are starting to take it as a form of payment. Bitcoin, as exciting as it is really a small piece of this big puzzle. And the gem is truly blockchain. So that technology, that confirming mechanism, is essentially what I call hiding in plain sight. And the anonymous nature of the blockchain allows me to send you money from my wallet to yours. Now, my wallet doesn't say Chima and your wallet doesn't say Carmen. My wallet is actually a 35-letter number combination crypto code. And your wallet is the same way. So if I send you $1,000 right now, you'll get it within a few minutes. However, the confirmational vehicle of blockchain has what we call miners, or computers that confirm the transaction. So they're doing the work of the blockchain, and they're getting little pieces of Bitcoin as a form of payment. So where example, Visa would get a 3%, let's say 3% fee for doing the confirmation between the restaurant and the bank.
Right.
The blockchain, the computers that are actually confirming the fact that I've sent you money, they're collecting a little chunk, let's say 0.5%, for them to confirm the transaction. And they are now creating a record. And this is what we call a record on the blockchain. So once that's created, you can never say, well, Chima, you didn't send me this money, because now everyone's information, every transaction is a public record, or what we call it's held in the blockchain and open source. So I will never have my name, or no one will have their name in that open source. But the fact that it's a crypto code and the fact that we hide in plain sight really helps us transfer funds quickly, anonymously. And we have the confidence to know that it's not going to get lost. If I send a wire, did the wire go through? Or I have to send money during banking hours, but a lot of people work. So if I have to send money to a particular country and the bank wants to take 3 or 4 days for the money to get there, I've wired money to Europe before, and it takes 2 or 3 days for the money to get there because the bank has to confirm with its corresponding lender or corresponding bank. And then now that takes a while. There's fees associated with actually wiring money overseas. In this case, if you were in London, I can send you, let's say that $1,000, you'll have it within a few minutes. I don't have to go to the bank. I don't have to wait days. And the bank doesn't necessarily have to know that I'm sending you money. That's my private decision. So with all those benefits, you're really seeing the Bitcoin or the idea of cryptocurrencies take off.
Now, you have an example that you like to use where you're explaining this to people in layman's terms, where you use, let's say, Mercedes and Tesla, and they are accepting money. One accepts. So can you explain, give that example?
Okay. It's essentially appreciation of the currency, right? So for most of us, we spend $1, let's say we spend $1 on an M&M's candy, right? So if we bought an M&M candy in January for $1, chances are if we go to the same convenience store, we're going to see an M&M candy today is what, the 6th or the 7th? We're going to have the same price for that M&M candy today. So in a sense, the dollar hasn't changed that much in value, or what you can actually get in exchange for $1. Does that make sense? Right. Now, in the example that I like to use with the automotive or the Tesla versus, let's say, Mercedes-Benz, if Tesla in January of this year sold $100,000 worth of vehicles, we know they did a lot more than that, but just for argument's sake, Tesla and Mercedes-Benz both did $100,000 in sales. Tesla took $100,000 worth of Bitcoin, however, and Mercedes took US dollar. Mm-hmm. Fast forward to December 7th, where the value of Bitcoin was once $1,000, let's say 1,000 in January, but now it's almost 20,000, right? So in this case, we have now gone over 2,000% from the value of Bitcoin to today. So if we're just looking at a bottom line of Tesla versus Mercedes, even if they've sold the same amount, but Tesla's selling in Bitcoin versus dollars, the value of that Bitcoin has increased over 2,000%, let's say, from what they took in. So it affects their bottom line. So therefore, a lot of businesses are starting to see this value. They're saying, well, if I sold merchandise just 6 months ago, Mercedes, the funds from January of this year, Mercedes would have in their bank account, it would still be $100,000 today in today's value. However, Tesla, that's a few million, right? Or that's a couple million just on the sales they had in January, dealing with the appreciation of Bitcoin. So many businesses are now starting to go, you can buy plane tickets with Bitcoin, you can buy computers, you can book hotel rooms. So many businesses are seeing the value of taking Bitcoin because the coin itself appreciates, whereas the dollar has been stagnant, right? Or most fiat currencies have been stagnant.
How do you get your currency on the blockchain?
Okay, well, the actual Bitcoin, or are you asking how do you acquire Bitcoin?
How do you acquire it?
Okay, so if you have an interest in buying Bitcoin, and the great thing about Bitcoin and investing in Bitcoin or owning Bitcoin is that you can buy it through various exchanges. So for example, if you're traveling to Europe, you would get off your plane, and whether it's London or Paris, whatever the case is, let's say you're going to London, as soon as you get off, you'll see a lot of booths or exchanges waiting to change your US dollar into pounds. So now you have exchanges that will exchange your US dollar into Bitcoin. And the most popular one is called Coinbase. And there they'll take your debit card. Now you swipe your card and you do a debit transaction, and then you can get $750 worth of Bitcoin. However, you can also wire funds, which they take a larger amount if you wire funds to them. And then within a few days, you'll be able to get that value worth of Bitcoin. Now, the great thing about investing in Bitcoin versus an average stock, if you wanted to buy, let's say, a Google stock or let's say a stock that costs $800-900, if you wanted to participate in that particular company, you have to buy at least one stock. And let's say that price is $800. And let's say a person who wanted to get their feet wet in Bitcoin, they didn't want to invest $800. They only had $500. Mm-hmm. Now, Bitcoin right now is like 18, 19,000. People often ask, well, that's way, way, way expensive or too expensive for me to actually invest. But with Bitcoin, you can actually buy a fraction of a coin. So with $500, you can definitely get an investment, or you can actually purchase Bitcoin or $500 worth. So you can buy incremental or in fractional pieces of Bitcoin in order for you to add to your portfolio.
So explain about the 10-minute window when you're purchasing. When you're purchasing your Bitcoin, there's a window of time that you can purchase it at that price.
Right, because with that window, and the reason why they have that there is because it's always fluctuating. So when Bitcoin, the price is always moving, and exchanges, they like to protect themselves with the price that you're quoted. And then that quoted price is good for that 10-minute window. So if you're looking to buy it, and let's say it's at 10,000, and so within those 10 minutes, that particular exchange will guarantee your price at 10,000. Now, 11 minutes from now, they might go to 10,005. You understand? So that's why you have to complete your transaction within that set period of time. But it's just a matter of just being able to hold a particular price for you, and so you're not subject to the fluctuation. But after that, prices can go up or down.
So you mentioned Coinbase, and you and I were talking in the past, and we discussed the difference between Coinbase, a bank, and a wallet. That Coinbase is kind of considered like a bank in a way. Can you explain to our listeners the difference between the bank and the wallet?
All right. So a bank or an exchange will accept your currency, or in this case, your dollars or euro, whatever your fiat currency is, and they will exchange it for Bitcoin. Now, Coinbase acts as both a bank in that sense, where they're actually exchanging your currency, and they will also hold it for you. Now, your wallet is very similar to, let's say, an online bank account, and you have various companies that have various wallets. So Coinbase is an exchange which they convert your currency, and you can use it as a wallet. So with the wallet, that means you can actually transact business through it. And you have some exchanges that just exchange your currency, and after they exchange it for you, then they send it to a wallet, or a wallet that you have. Now, some places are exchanges only, and some places are wallets only. So for example, popular wallets would be Coinbase is actually a popular wallet as well. You have Blockchain, you have Jack's Wallet, and there are a few other wallets that are out there that are pretty popular, and there are what we call virtual wallets. And then you also have physical wallets like the Trezor. So that one you actually keep at home and you're safe. Now, some places give really good rates as far as the exchange rates, and people like to exchange through them. And then afterwards, after the exchange, they will transfer those funds to a separate wallet. Now, Coinbase is basically like an all-in-one type of setup. They'll do the exchange and they'll keep the Bitcoin for you in your wallet.
Now, we hear a lot about mining, Bitcoin mining. Can you explain to our users what Bitcoin mining is and what it does to getting the money, moving the money along? I know you've touched on it, but can you just explain or give a brief scenario?
So the term mining is often sometimes confused with actual, as we know, mining, whether you're mining for diamonds or gold. And people are like, how does mining really work with this digital currency? So mining is just the activity of the computers within the network. So the computers around the world that are connected through let's say in this case, the Bitcoin blockchain, they're doing the work of the blockchain. And the work of the blockchain is making sure transactions happen quickly, smoothly, and most importantly, accurately. Now, as the computers are solving it, and the way that these computers do it is by solving complex problems. And by solving these problems, it's actually, in addition to, or a part of solving the problem is confirming certain transactions that are taking place, or the transactions within the blockchain. Now, for example, to use the same example, when I send you Bitcoin, the work of the blockchain is to confirm accurately and hopefully fast so you can receive your coin as quickly as possible. And me, the sender of it, I know that coin isn't lost and it's been sent to the right person. So that is the work of the blockchain. Now, the actual work of the confirmation is what we call mining. So as soon as I hit send, then that request into the blockchain is sent, and various computers will start to solve the issue, essentially confirming that transaction. And the work of each individual computer is called mining. And therefore, as the computer goes to work, just like a worker in a mine, the computer is doing the work of the blockchain. And just like that worker in the mine or that independent miner, their reward is what? Coin. Their reward is gold, and their reward is diamonds. So in this case, the workers in the blockchain, i.e. the computers, as they're mining or doing the work of the blockchain, their reward is a little small incremental piece of the transaction. So they get a little piece of coin. So for their work, they're getting a reward. And essentially that's why that's the analogy between the work that the computers are doing versus the traditional take on mining when an actual person is mining for something valuable.
Mm-hmm. Now, there's a cap on Bitcoin. They're only going to make so many. So can you give a little bit of detail on that?
Well, I believe the number is about 21 million as far as the number of coins that will be produced. Now, there's a certain number of coins that are put out into the blockchain at incremental points and times, and for the next X number of years until we've reached that maximum. Now, that is also adding to the allure of Bitcoin. There's only a certain number of these coins out there. And just like, so because you now have this rarity factor, like, wow, look how great this idea is as far as being independent and the anonymity of it and the speed of it, and so having a currency across borders and being able to identify a certain value with different things. So this great idea is now capped at a certain number. And yes, because it's so rare, you're now like, wow, this is a valuable currency. I want some of it. I want a deal in it. I want to have some for my own. And that's why you're seeing this meteoric rise.
I have a question. Right now we have the stock market is doing well, and it's predicted that it's going to crash. How does cryptocurrency play in that? Can it be used as a hedge? How do you think it will be affected? What's your take on that?
Well, there are different factors that cause markets to go up and down. All right. So we've had a very healthy, robust, and aggressively moving market over the past, let's say, 10 years. And we're continuing to hit new highs and new highs and new highs. And yes, the market will, what we call in trading, retrace somewhat. Yes, you will see the market come down somewhat eventually, because that's the normal way that markets move. And so down trends are a part of what we call a healthy moving market. The market can't just continually go straight up like a rocket. Markets tend to move in waves, up and down. And ideally, you have a certain trajectory that you're moving over a set period of time. You continue to move at a higher angle, right? Now, with companies or the stock market, a lot of it is driven by of course, jobs, how healthy certain economies are doing. And if everyone's working and everyone's spending, then companies are making money. And ideally, if the bottom line is growing, then your stock price is growing. Now, when you look at a currency, as I just discussed, how rare this currency is it going to be widely used? The stock market won't necessarily dictate how Bitcoin is doing. Now, they both have to be going up. As you can imagine, Bitcoin is going up at a much higher rate. But just because the stock market goes down doesn't mean that Bitcoin is going to go down, because they're two separate things. One is a currency, and of course, the stock market is indicative of a lot of other factors. Now, even though the stock market may go down or people may, let's say, stop investing for a set period of time, it doesn't mean that people are going to stop sending money. As people are going to stop spending money. And the benefits of Bitcoin are still going to be there. People still want to be a part of that and the benefits of it. And that isn't going to go away whether the market's going up or down.
Well, I really appreciate you taking the time out to share this information with us. I definitely hope that you will be able to come back soon to talk a little bit more about Bitcoin. Before I let you go, is there anything else you'd like to share? I know there's a movie that you always suggest people watch. Is there anything else you'd like to share?
Yes, there's two things. First, I recommend that everyone watch. There's a documentary on Netflix. It's called Banking on Bitcoin. Whenever I sit down and talk with potential investors, one of the first things I recommend them do is watch that movie. Afterwards, they're able to really walk away with an understanding of why it was created, how it was created, and understanding a little bit more about the currency itself and also the blockchain and the importance, and most important, the value. Because I call the blockchain and Bitcoin the Internet 2.0. A lot of people miss that initial investment. And if they can go back 20 years and say, wow, if I knew today, if I knew then, what the internet was going to be today, they would have invested differently. They probably would have chosen a different career, would have really been a part of that internet revolution that took place. Now, Bitcoin is having its own revolution just as far as the benefits of it. And so we're really seeing that. So don't miss out, again, for most people. And also really consider investing with Bitcoin. Don't be just limited to buying Bitcoin and holding it. All right. So you're able to actually, there are many ways where you can now invest in Bitcoin, where you can experience both an appreciation in your investment and as well appreciation in your Bitcoin. So keep that in mind, be open. There's a new world of investing happening right in front of our face. Take advantage.
Okay, so I'm going to have you back on so that you can tell people how they can invest in Bitcoin.
Okay.
So be ready. My listeners, how they can find you.
All right, they can find me via email, Chima@chimaburey.com. So that's Chima, Chima, at Chimaburey, Burey.com.
Well, thank you so much for joining us. Thank you, everyone, for taking the time to listen to us at the HoneyPot Podcast. I'm your host, Carmen Hendricks. Be sure to subscribe to the podcast and like us on Twitter, Facebook, and Instagram using the handle at HoneyPot Podcast. You can also find me at CarmenHendricks.com. That does it for today's podcast. I'm putting the lid back on the pot. You guys have a wonderful day. Bye.